Good afternoon, everyone. Welcome to the Show Me the Money session. Is it traditional finance or should I call it alternative finance? It's both. So let me introduce you properly to our panel. I would like to thank Maritime for this opportunity to moderate this panel of experts, which is a very interesting and diverse panel, having financiers and advisors from Greece, Norway, and the US. So on my left is Iraklis Tsirigotis, who is Director of Origination at Neptune Maritime Leasing. Next to Iraklis is Arjun Thampan, who is Senior Vice President at EnTrust Global. Next to Arjun is Astero Kampisiou, who's Head of Greek Clients and Partner at NorthCape AS. Next to Astero is Wilhelm Magelssen, who is Partner Fund Manager at NRP Maritime Asset Management AS. And next to Wilhelm is not George Giannakis, but his partner in crime, who is Nikos Petrakakos, and is managing partner at Alantra. Thank you all for being here. Let's start. First of all, I would like to tell you the structure of the... I have 5 questions for you. And after that, if we have time, we're going to open the questions to the floor. Alternatively, if no one has questions, I'll ask personal ones, if that's okay with you. Okay. And yes. And it's a ship finance panel, and it's the same. I saw Dora wearing about green financing, wearing green, and I could have worn green as well, representing the dollar, but I missed that. So let's start with the market forecast. The shipping markets are strong, and it looks like it will last. Do you agree with this statement? What is your view? And if I may start with Wilhelm, please.
Sure. My market view. I'm sure there are people better placed to have a qualified opinion on the market, but I'm a simple guy, so I have a simple view. Shipping is close to a perfect market. So e.g., it's just a function of supply and demand. Supply side looks good, as been said before here. The order books are low, particularly in dry bulk tankers, and somewhat capable in feeder containers as well. So our credit fund is basically lending towards the smaller ships. We give $5 to $10 million loans to Supramaxes, handies, and small feeders and MPPs. So the order book supply side looks good. And on the demand side, I fail to have a qualified opinion, as I've had the last 20 years, and I don't think anyone has a really good qualified opinion on demand for shipping the next 5 years. But if I'm to guess, and it's not difficult to put a cloudy picture on the demand side today with increasing inflation and interest rates. But my simplified view is that 85 to 90% of all trade goes on ships. So its demand is driven by our demand. It's your demand, my demand, the people's demand. And what do we demand? We demand 3 things. We demand energy, we demand food and roof under our heads, and we demand things. And in a recession, I believe that food and energy is going to be more sustainable than things. So in terms of demand, it looks worse for the containers than for dry and for tankers. But I think all segments are going to be somewhat saved by the supply side. So I think we will see volatility going forward. But I think the volatility has moved up 1 or 2 floors since the 5-6 years before COVID, and I think that is going to last. So volatile, but the next 10 years or next 5 years is going to be a lot better than the past 5.
Thank you, Wilhelm. Nikos, what is your view?
Well, I think what Wilhelm said more or less covers it up, at least on the conventional shipping side. It's one of these times in history that other sectors are also doing great, such as offshore, has picked up a lot, which is driven by demand for energy. And the final market, that it's not really a shipping market, it's a money market. The availability for capital for shipping is quite high. We will, I think, discuss it later as well. So I think in the next year or so, markets will probably correct in some of the sectors. Dry has already corrected. Container ship market looks like it's correcting aggressively. But there are, on the demand side, enough, let's say, attributes that show that rates will sustain.
Thank you. So I'm very curious to find out, and I'm sure the audience would like to know, on what types of transactions you are focusing. And if you can, this question is direct to all of you, and I will start with Iraklis. And if you can also give a brief introduction of your company.
Absolutely. Before I do that, I would like to congratulate the Marine Money team for this amazing event, and also Matt for the comment he made in the beginning that this is a traditional finance panel without any bank. So that already hints how much the leasing model has advanced, that I don't think it's any more alternative finance, but it has become really very much mainstream. So set that aside, we started a bit more than a year ago, but in essence, given that we spent the first few months to set up the business, it's pretty much a year since we are up and running. What we are doing basically is we try to service a broadening gap of capital. That's not really very much obvious the last year because there is so much euphoria in the market, the shipping markets, but also some of the banks that are still active in shipping, they have been expanding their books. But overall, we see that capital need increasing going forward, and therefore, that's a place for us to try to do business. What we cover is the 5 traditional shipping classes: container ships, tankers, dry bulk, LPG, LNG. Our structures typically have LTVs that range between 60 and 80%. Similarly, our margins follow kind of a higher level compared to what you experience from banks. But of course, the benefit is that provide more flexibility. The flexibility can come in different forms, whether it's in slightly repayment profiles, longer than what a bank could consider, maybe some higher advance ratio, as I said, or other structural elements that depend on a case-by-case basis.
Thank you. Arjun?
So EnTrust Global, I'll just firstly give you a brief introduction of EnTrust because we've come a long ways from when we first set up. So EnTrust Global is a $20 billion asset manager headquartered out of New York. So when we launched about 6.5 years ago, the thesis was to basically come in and fill the void that was left by traditional lenders. So we started out more credit-focused, providing leverage to people who were not getting access from banks. But over time, and just as a function of how markets and cycles have gone, we've also expanded into investing all across the capital structure. So since we've launched in the Maritime strategy 6.5 years ago, we raised about $4 billion and invested a vast majority of that. Today, we also, and one of the transactions which you may be aware of is, we acquired the Mars Capital portfolio last year. So through that, we have a big equity position. Now, to answer the question more, again, given that this is a shipping finance panel, I'll tell you what we're doing these days from the credit investing side. Again, alternative finance kind of now connotates to a higher leverage. So in terms of leverage, we're higher than what banks would offer, and similar to what Iraklis had said, that would be the levels that we would be going to. Margins, again, as a function of that, higher than what banks would offer. In terms of profiles, it depends. So we are, in terms of the fleet that we finance, generally tends to, given the nature of capital, generally tends to skew towards older tonnage. So which means, again, the tenor would depend on, what's the age of the ship. So again, it can go all the way up to 7 years, depending on the fleet or the vessel that we're looking at. And, we are initially, when we set up, we were focused on mainly dry bulk containers tankers, but over time we've expanded into more of the shipping sectors to date.
And you do, Arjun, you do also a leasing, sale and leasebacks, and
correct. So we do senior secured credit, we do sale and leasebacks, we do mezzanine. We initially did pref equity, but now we do common equity as well within the the broader platform. We also have an affiliate business out of London. It's called Purist Marine. There, it's focused on basically leasing equity, so new buildings on the back of long-term contracts. But that's a different business, which if anyone has questions, I can direct you to my colleagues in London.
Okay, thank you. Astero?
Is it on? Yeah. Hi, I wanted to thank Nicholas because he brought a point that I wanted to discuss, the offshore market. So continuing to the first question, really, we see a big drive, and this is the market that we see there will be. Sorry, is it okay?
Now, yes, if you have
okay.
A bit closer.
So this is the market that now the financiers are or focusing or will be focusing, as well as other asset classes that had been suffering in the last 2 years. As an advisor, NorthCape has views several distinct markets or asset finance markets like aircraft finance, cruise finance, of course shipping, and lately OSVs. We did a fantastic transaction for OSV vessel servicing the offshore wind installation in Norway. Of course, it plays a role that we are a Norwegian entity, knowing the players and the clients there. And on that particular transaction, actually, Arjun's company helped us. So we were partners on that. But like everything else is recognizing which player is the better suit for a particular transaction, and that is our value as an advisor. Yes, of course, our majority of facilities and financing sources are in China, only because they like big transactions and big players, and therefore the appetite is huge. Same we see in Japan. Huge appetite this year. Of course, the weak yen helped a lot of owners to buy back the vessels, and there is a lot of capital to be invested. So we are not focused on particular asset type or profile or leverage. We can accommodate everything depending on the project, and that is where our value. We sit down with the client to discuss what is the most suitable, what makes his IRR, what they need for the projects to be profitable, both for the owner and the financier, and avoid what in the top of the market is very probable to happen afterwards, some trouble. And concluding, I wanted to say that we are starting a cooperation in the US for private placements, and hopefully soon we will be able to share more.
Thank you, Astero. Wilhelm?
Yeah, so we have an equity fund and a debt fund, and I'll speak about the debt fund since this is a financing panel. So it's a really simple strategy. We do first lien loans in the smaller end of things. So we lend out single loans to single assets in the size area of $3 to $10 million. So we decided to focus in the space where the banks are not so present, and also the space where the other alternative finance providers are not so present. So we typically give first lien, normal bank first lien loans, $5 to $10 million for dry bulk, MPPs, and feeders. That's it, simply put.
Thank you, Wilhelm. Nikos?
So we're more or less pretty similar to what Astero described. We don't focus on a particular sector or subsector or a geography. I mean, the $2.5 billion we've raised so far for clients, transactions include M&A transactions, both on conventional shipping and offshore. About 2/3 of that is probably senior debt raising. for deals as small as 4.1 million and as large as 250 million. For us, the value is, again, more of putting together a strategy for clients and how this strategy can be realized through financing. In that, we have connections probably around the globe, including the Middle East, where we have a very strong focus. We have an office there. Now we're doing deals with Middle Eastern banks that are financing Greek owners, which is, I think, a completely new market if you probably take out the Gilikoussis or their Nike-clad ships. Yeah, we focus on probably institutionalizing companies that are not the largest ones to be able to sit across an investor and make a deal work together.
Thank you, Nikos. Now, as we all know, shipping is a cyclical business, and providing finance when the market is strong can leave a financier exposed to a downturn in the industry. How do you manage financial risk at the top of the market? Arjun?
Happy to take that first. So, as you mentioned, right, shipping is very cyclical, and then within the different sectors and subsectors, they have their own individual cycles. So it's important when you're looking from the credit side, depending on which sector, which cycle, how you underwrite. Just as most people are aware, like given where container markets are today, we're not providing any debt capital to that sector. We haven't done any transactions of late. On the tankers and the dry side, values are about mid-cycle levels. So I think what you need to make sure is that, again, being alternative finance, our leverage tends to be higher than what the banks are doing. Make sure there's alignment from day one between the lender and the borrower. So it ends up being more structured. So there's no box per se. It depends on the transaction. And typically what you're looking to do, given where the current strong earnings environment is, within the first year, you're looking to get as much applied towards debt service, and which, again, is helpful from the borrower's perspective as well, so that, from a 12 months down the line, from a historical perspective, your exposure is fine, and then borrower is also in a good position. So that's important. And then we also lend to small to mid-sized owners. So sometimes people come to us because they want someone who can move fast, and they have, especially with the run-up in the markets, they have embedded equity in their vessel, so they want someone to refi the existing indebtedness, release some cash, and opportunistically acquire assets. So we've done some of those transactions as well. So there, leverage may be higher, but when you look at the overall fleet, there's credit strength and profile. So in a nutshell, it's become more structured, and you have to look at all the different parts of the puzzle to figure out what your optimal structure is.
Okay, noted. Iraklis, what is your view?
In the environment that we are for the last 12 to 18 months, it requires a higher degree of structuring assessment, the various elements, because everything is quite much inflated. In an ideal situation for us, we will have been able to experience a more counter-cyclical financing in a way that suits for us very well, but also the parts that we team up with. But that's not the environment we have been for the last few months, as I said. So on one hand, we have the mentality that pretty much patience is a virtue, meaning that better to wait a bit and find the right moment in time to basically purchase the vessels, because we are the registered owner at the end of the day. But for the next few months, we are going to still focus on highly structured transactions with employment attached for certain sectors, and high degree of assessment overall.
Thank you. Wilhelm, as a financier as well?
Yeah, no, so for us, I think in any market, if it's high or low, our number one priority in terms of risk management and generally management is alignment. So that starts with, we like to lend money to good quality ship owners buying good quality ships. And what I mean by that is the ship owners we like are the ones that are putting their own money as an equity into the ship, and thereby protecting us as a lender by protecting their own equity. And obviously in and they have a good reputation, a good track record. You can ask around anybody; they will tell nice things about them, and you can do a lot on due diligence on people in the shipping industry, because in the end it's a small industry and people know each other. And in terms of structure, we're quite flexible. We tend to look more towards break-even rates than on absolute leverage. So obviously in a higher price environment today, the prices are high for a reason. It's because charter rates also are higher, so you can amortize a lot by the first 6 to 9 months to get down to an acceptable break-even level. So that's how the little focus we spend on structure, but most of all it's to secure alignment with good quality owners with their own money at stake.
Thank you. So after the financiers, it's the advisors' turn to answer the next question. And how does the lenders' landscape look today? How has it developed over the last 12 to 18 months? Who are the new players? Astero, what is your view?
I think George is one of the new players, or Nicholas. Maybe he should answer first.
I can take that, yeah. The landscape has evolved quite a bit in the last 18 months. Obviously, when a sector is performing well, there are new entrants that are coming in, taking a second look and whatnot, or you have people that were in the market, again, coming in more aggressively. We've seen that with most of the credit funds that have been around for quite some years. We have been lucky and honored to have worked with most of these people, and we see that evolution in the way they look at things. What you're describing before is affected by the landscape, so how things are structured. The people that come in don't just come in to lend, they have structures in mind, they look at historicals, they look at the quality of borrowers in different manners. But I think what is more interesting is how this will evolve 12 months going forward. Okay. And not having our own funds committed to deals, but looking at probably 70 different lenders right now, we see that things change as the sentiment in this room is changing about the shipping markets. So we see some tightness coming in terms of availability of capital. Pricing is not much of a question now. SOFR plus 4% is more or less 8% fixed, so pricing is a secondary discussion. I think the evolution of availability of capital will tighten, and new entrants will probably come from Asia. So Chinese leasing companies, not just the big ones, there are smaller ones that would look at second-hand ships, would look at older vessels that are entering the market. So it's an evolving landscape, if you will, with more people, I think, coming in than going out. I think the ones that are already in the market are still super excited about it. So then in the next few months, we will see some changes in that regard. For our work, I think one success we have managed to achieve is that we're bringing Middle Eastern capital into the market as well, which has been completely out of the game, besides maybe offshore deals for Middle Eastern clients. So that will be a new entrant in the next few months, and hopefully that will be available for our clients shortly.
Thank you. Astero, you also mentioned Japan.
I did mention Japan, but first I would like to go to the opening George did for me for the new Chinese lessors. NorthCape has an office in Singapore. It keeps us well informed of what is going on, which transactions, which terms. And we see an influx the last probably 18 months of lessors that until that time were focusing on aircraft leasing. Now they are taking teams from the top ship finance lessors in China, and they are starting strong. They are bigger, most of them organizations, because the aircraft are bigger tickets, and they have a lot of appetite. But they start a little bit more cautiously. That is one of the main changes we saw in the market as new entrants. Also, exactly Japan. The traditional SLB and JOLCO from Japan now is very competitive, as George also pointed out. Now, 5 years swap and is almost equal with 3 months LIBOR. So a 5-year swap fixed rate together with a margin of 3.5–4% makes a Japanese deal pretty competitive at the leverage that they are offering. We've seen from 75 to, okay, 100% for JOLCO, but outside JOLCO, even 85% for the older vessels. Of course, the differentiation which exists in all Asian markets is that they require a holding structure, a corporate guarantor, someone that they can go back and say, look, maybe this vessel is having some troubles, but we know you are there to support, and your willingness to support is evident by having a holding structure. Of course, that perception is not shared by all our esteemed audience here, for good reasons for many of them, but the market is going that direction. We've seen that with the aircraft. Now, leasing is the only, or the 99.5% form for aircraft, and we see it is going there for ships as well. Equipment is that direction, and a lot of other capital-intensive assets. Other new end, of course, we've seen also the ESG funds. I think Alantra set up a new ESG fund.
Yes, we do have one.
And definitely there are much more lenders interested to finance offshore wind support assets. They are really safe, long-term contracts. And this is the main protection for a financier in this high market. Long-term contracts, or contracts that can amortize the asset, the loan, according to Wilhelm, to a historic average value that is comfortable. So and the turn to energy, offshore energy. FPSO is one of the projects we are working on at the moment, and preferred equity. There is a lot of drive. Like Harry mentioned earlier, the preferred equity investors are there. They are looking for good projects and good companies, and it is a market we are tapping, and there is a lot of interest as well.
I think one thing I'd like to add is basically now the owners have a lot of options. There's a time and space for each type of capital, so ultimately the menu is there, and depending on their situation and what exactly they're trying to solve for, there's a place for all the entrants in the market. So I think it's a good thing overall.
Thank you. Astero, you mentioned ESG, and so my last question is, how do you factor in ESG and decarbonization strategy into the finance equation and credit analysis? So Iraklis, would you like to go first?
I would say more and more, it has become one of the key considerations for us, starting from small things. And by the way, when you say ESG, not just the E, but also as energy. For instance, today is the 40th anniversary of Helmepa, and we are very much a supporter of that. So we have, organized different events around it internally and one or two externally. So we also care of the social part around it. But more on the E, I'll go back to a point that was made earlier this morning about whether we are going to end up in a situation that you have vessels that will have different ratings, A, B, C, D, E. I think that's coming. One way or another, that's coming. And maybe the kickoff will be next year with the EEXI and CAI regulations coming into effect, or a bit later down the road. So to be more specific on what we do about the E part, in our assessment, I already hinted, the vessels that we would like to finance to be compliant for the tenure of the lease with the EEXI and CAI. If that's not already not in place, then we would like to work with, create a plan, see what kind of improvements need to be done, and finance very much those. And then another big area for us, which is a bit further down the road, is the alternative fuels. We very much have active discussions with a number of different stakeholders, and engine manufacturers, fuel producers, alternative fuel producers, and others. So we have already the experience internally and be able to have very specific discussions in the next few years about what should be the change that will make a vessel resilient enough for the next 10, 15 years, not just for the next 1 or 2 years. So that's something we spend quite a lot of time, and we think that so far has not been given the value it should, but that's going to increase more and more.
Thank you. Arjun?
From our perspective, I mean, ultimately, being a lender, what you have to look at, what does it kind of mean from you're lending against collateral? Compliance is important because otherwise that affects the tradability of the vessel, which ultimately means that there's less, cash flow available for debt service. So, similar to what Iraklis said, right? Like, compliance is required, but I think the way regulations stand now, right? EEXI is pretty straightforward. There's a few changes and relatively inexpensive modifications to the existing vessels, and you can comply. But there are other regulatory factors which are harder to quantify, like CII. Who is to blame if there's a weather issue or a hurricane and the ship is routed, and because of that the rating goes up higher. So again, I think generally it's a bit of I think people are waiting and seeing what will happen, but from our perspective, I think compliance is important.
Wilhelm, your view?
I'll do it quick now because I see Matt is here and I see the clock is on overtime. But no, real short, we're a small lender borrowing to relatively small owners. So obviously we're not in the forefront of spending R&D money on ESG. We have some of our LPs require that we don't lend money to vessels carrying oil or oil products, so tankers out. But other than that, we can do what we want. And in terms of ESG, I think it's down to alignment again. I'm from Norway. We're transparent people and transparent company, and we require the same from our owners. Be transparent, treat your crew well. That's something we focus on crew rights, and do what we can do something about. But there's no absolute requirements in terms of credit analysis, to put it that way. But we like transparency and alignment.
Thank you very much. Thank you for this discussion, and it's good to know and live on a positive note that more, capital is coming and and more players are on their way from everywhere in the world than the ones that are leaving. Thank you very much.